Hello, everyone, and welcome back to the Daily MENA Market Call. I'm Razan Hilal, market analyst with Forex.com. Today is June 9, 2026. Just a quick 1 minute disclaimer in the background and just a quick recap. This is a Daily MENA Market Call running every week, Tuesday through Friday, covering major markets between precious metals, commodities, crude oil, major indices, and local regional markets, including the UAE MSCI and major UAE equities as well. So we have interesting rebounds this week following the steep sell-off on Friday. That was also led by the tech and AR rally, and we're also challenging or facing upcoming challenges with the US CPI report, as we still have an extension for the blockade in the Middle East, and with the overall oil supply shock, despite the latest uh, short drawdowns across the crude oil market. And we also have the SpaceX IPO on Friday, which is raising potential liquidity risks or potential drainage for market liquidity as we are navigating the beginning of the summer season, which usually faces liquidity risk and is now also potentially amplified with the extension of the Middle East conflict that is effectively entering its 100th day. Okay. The 1 minute disclaimer is up, and we'll be starting with the crude oil chart. Over here, we have the 3 day time frame for the WTI US oil. Now, the 3 day time frame is used to minimize the noise seen on the daily chart, and we can see the price action here attempting to have a bearish breakdown below a multi-month consolidation that has been holding on the crude oil chart following the steep rally in March 2026 that approached approximately $120 per barrel and 2022 highs. Now we can see that the overall price action here is leaning towards a potential bearish breakout in line with that unsustained wick to the upside from a 3 day time frame perspective, and with price action hovering below the bounds of that multi-month consolidation and below the critical $88 per barrel support. Now, the higher or the more critical support zone here is the $85 per barrel, which also gave way to another bullish rebound once crude oil prices attempted to break down below that consolidation in line with hopes for a potential near term peace deal between the US and Iran. And since these headlines are still fluctuating, and since we have the persistent conflict across the region, we have that overall structure or that potential breakout carrying a potential cautious signal until we have confirmed and potential long-term peace resolution between the US and Iran. So over here, should we have a sustained hold for price action below the $85 mark and that previous May low, we might have potential confirmed resolution on the horizon and extension or extended bearish forecast for crude oil prices to retest the previous lows in April 2026 near the 76 to the $74 mark. Over here, as I previously mentioned in my previous webinars and videos, we'd be aligned with the previous high of 2025 that marked also the peak of last year's Middle East conflict, also involving the US, Iran, and Israel. And should we have a sustained hold below that, we can have a confirmation for a regional overall regional de-escalation, potentially targeting the $67 mark, which was a previous support and resistance to crude oil prices, at least since 2019, where we can have either another bullish rebound scenario for crude oil prices or extended consolidation that can relieve the global crude oil energy market and, of course, inflation, bond yields, and the markets in general. Now, on the upside, should crude oil prices revert back inside that consolidation and close back above the mid zone of that consolidation, which we can consider as a neutral zone, that would be above the $95 to the $96 mark, we can expect another surge back towards $100 per barrel, where we can either test another pullback risk or a potential bullish breakout back towards record highs with key levels in sight between the 106 to 112, and of course the 118 to the $119 per barrel for projecting highs above the $130 per barrel, potentially reaching extreme highs as high as the $160 per barrel, as these levels align with critical Fibonacci extension ratios of the overall trend spanning between 2020, 2022, and 2026. You can see the exact alignment of that Fibonacci extension pattern in my previous webinars. Now, dropping down to the 3 day time frame, I think we covered everything here. And also, if you look at the momentum pattern We can also see momentum capped with a downtrending resistance, also connecting lower highs since the peaks of March 2026, which is keeping that overall bearish bias intact. Over here, we're hovering near the 15 neutral mark. So, of course, a sustained hold for a momentum below the 15 neutral mark and for price action below the $88 mark, we can possibly have a build up case for a drawdown in crude oil prices that can also possibly relieve global markets. Now let's look at gold and silver major charts that are facing notable headwinds as a result of the Middle East fluctuations and elevated bond yields in line with the strength of the US dollar, higher inflations, and the hawkish tilt in central bank positioning. We're going to go over crude oil in terms of gold, in terms of the price action, and in terms of the hints we can see here on the momentum indicator. In terms of the price action, we can see a solid hold above the 4,270 support and price action still capped below the 4,360 resistance, below the overall trend line connecting consecutive lower highs of the overall downtrend spanning from the yearly highs and from March 2026. Now, should we have a sustained hold for price action above the 4,360 zone, we can expect a bullish breakout attempt to potentially revisit key levels between the 4,390 to the 4,400. 4,440 and then further towards our high probability setup near the 4,530 for potential pullback risk. If not, we can potentially visit the previous 4,600 and the 4,680 zone. And the higher gold prices potentially deviate away from that downtrending bias, we can be shifting the overall outlook towards a bullish one that can potentially target that previous top of that diamond pattern that gave way to that a latest steep sell-off near the 4,760 and potentially open the path back towards or build expectations back towards record highs on the gold chart, which puts the spotlight on the current lows here as potential dip buying opportunities, as potential long-term dip buying opportunities for investors and traders. Yet we can still have a potential downside risks should markets turn south again. And as we also have momentum here broken down below multi-month consolidation, which is also hinting to another potential drop should we have another drop below the 4,270 in terms of the price action on gold. We can possibly revisit oversold levels last seen in March 2026 before that long-term dip buying opportunity can emerge. If we're going to translate that into price action, we can be looking at the 4,180 and the 4,080, which are the yearly lows, or either another rebound opportunity. If not, we can be looking at that previous support zone of October 2025, which is near the 3,800 zone that can open the way for potential long-term dip buying opportunities on the gold chart once again. Now, if we translate that vision on the silver chart, which has a positive correlation with the gold chart, we can see that silver is holding above the $66 mark over here, which can be defined using Fibonacci extension tool. Now, of course, as markets move, we can be defining or refining our levels using Fibonacci extension tools. Over here, we can see that the silver chart is holding near the 786%. And should we have a sustained hold below that level, below the $66 mark, we can be expecting drawdown risks also to revisit the lows of this year, near 62.70 and near the $58 mark for potential dip buying opportunities. If not, we can target the 1618 Fibonacci extension near the $52 to the $50 mark. Over here, would be aligning with a multi-decade resistance spanning from the highs of the 1980s. As I previously mentioned, of course, the zone would have a high appetite for potential long-term bullish positioning on the silver chart. Once again, if respected. Going back to the daily time frame and going back to the map and hints that we can take from the RSI indicator, we also had that bearish signal for silver once we had a breakdown for momentum below that uptrending support that was connecting consecutive higher lows since the lows of March 2026. Now, also these lows are aligned with yearly oversold lows, yet we can still have a chance to dip down to oversold levels possibly seen back in April 2025 that can support the bearish scenario and open the path for long-term bullish positioning once again. If we are reversing from here, should we have a sustained hold for price action back above the 69.80 mark or the 70 psychological mark, we can possibly revisit these previous levels that were previous supports on the chart. So that would be near the 72.60 to the $74 mark, and sustained hold above that would likely also start reasserting that bullish conviction for silver prices in line with gold bullish rebound, potentially aligning back with key levels between the 78 mark and the $80 mark, respectively, where we can test either another pullback risk or sustained hold for that bullish price action on the silver chart that can potentially re-enter the dominance of that uptrending cycle from the lows of March 2026, targeting that previous peak here near the $90 mark before opening the path again to 100 and the record highs, respectively. Now, next up, we have the NASDAQ chart, which is on a very notable bullish rebound following the steep drop and the sell off that happened across the end of last week, between Thursday and Friday. We were talking about these previous support levels and the breakdown for NASDAQ below that uptrending support last week. And once we had that confirmation, we had that extended rally and we had momentum also rebounding uh, from two key points. One from the neutral $50 level, and two from the target of that head and shoulders pattern formation. As I previously mentioned, momentum indicators can also trace price patterns similar to that seen on the price chart and can also give hints for potential reversal opportunities. Reach the target of that head and shoulders pattern in line with that critical support zone on the NASDAQ chart, which was a previous support to price action in May 2026 near the 28,600 to 28,700 zone. Now, currently we're facing the 29,700, also previous support now turned into a resistance and potential barrier between bullish and bearish bias. Should we have a sustained hold for price action above this level, we can also build the case again for a bullish forecast on the Nasdaq chart, potentially realigning back with the 3,100 to the 3,180 and further towards the 3,500 and the 30,900 and up towards the 31,700, potentially aligning back with the lower bound of that respected uptrending support, now potentially turning into a resistance. But the overall idea would be realigning a Nasdaq back with forecast towards record highs. If not, should we have a sustained hold for price action or confirm that overall bullish rebound as a potential short-term correction within a potential broader rally, a sustained hold for price action back below the 29,000 mark and the 28,600 mark would likely extend bearish forecast towards key levels between the 27,800 and the 26,800. Of course, should we approach that area over here, which was the resistance zone of the consolidation extending between 2025 and 2026, we'd have another setup for long-term bullish positioning on the Nasdaq chart once again. So definitely we can be expecting high volatility risks as we approach a SpaceX IPO, exposing investors to AI infrastructure, satellite or the biggest satellite network known as Starlink, and with all correlated charts related to the space or AI and tech to potentially have also volatility headwinds as we might have liquidity restructuring across the funds once the SpaceX enters the market, which is expected to be the biggest IPO in history. These are the key levels on the Nasdaq. The levels defined on the upside and the downside are both defined using Fibonacci extension and retracement tools. Also, I demonstrated that in my previous webinars. Next up, I'm going to go over the Bitcoin chart before ending it with the UAE MSCI. So, with respect to the Bitcoin chart, rebounded slightly from near the lows of this year, but we did record a new low here near the 59,000 mark, and we still also have a shallow price action here, a cap below the 64 or the 65,000 previous support now turned into a resistance. And over here, we can still see the risk sentiment on Bitcoin still leaning towards a cautious note, although we have oversold levels on the daily time frame reminiscent of the lows of 2026, which is building a potential case for dip buying opportunities. Should we have a sustained hold for Bitcoin below the 59,000 mark, we can possibly revisit that previous support area here in August 2024 for another potential long-term dip buying opportunity that would be near the 50,000 or the 49,000 zone. And of course, we'd have a momentum potentially confirming a stretched oversold state, opening the path for bulls potentially to get back into the Bitcoin investments. Now, on the upside, should we have a sustained hold for Bitcoin back above the 65,000 zone, we can potentially target once again the 68,000, the 70,000, and the lower bound of that uptrending parallel channel near the 74,000 mark for either another pullback risk or extended a bullish breakout and also a more confident bullish outlook, potentially targeting once again the 78 mid zone near the 83 and that previous high. It's a similar setup to the silver chart, actually near the 83,000 mark, also before opening the path back above the 100K and the record highs on the Bitcoin chart. Just key levels over here, confirming across major risk charts, the Nasdaq, gold, and silver, just key levels that need to confirm either another extended drawdown or a sustained recovery for the month ahead. Last but not least, we have the UAE MSCI, which represents the major or the main performance of the UAE markets here as the region tries to navigate and recover from the impact of the overall US Iran conflict. We can see that the price action here is attempting to hold within the bias of that uptrending parallel channel since October 2023, in line with the overall bullish rebound from the lows of 2020. Now, price action here is attempting to hold that mark. Of course, should we have price action climb back within the bounds of this channel above the 19 mark, we can possibly target that previous resistance near the 1980 and further towards a critical multi-decade resistance that is possibly the neckline of an inverted head and shoulders pattern. And why is this important? Is that if price action does manage to sustain itself above this level and cross over to the mid zone of this channel near the 22 mark and potentially higher, aligning with our previous 2026 high, we can possibly have another confirmed or forecast for an extended bull run on the UAE MSCI in line with the positive correlation with the US indices and its overall exposure to big tech and mega cap companies similar to that across US indices. Now, on the downside, if we're going to face another potential drawdown risk, the key support here to look at is the 1830 mark. Should we have a sustained hold below that, we can possibly target the 1740 mark for another either bullish rebound opportunity or extended drawdown before that long-term bullish positioning can be entered the picture, potentially aligning with the 16 zone or a steep case scenario towards the 1560 in line with momentum's fragile hold here below, slightly below the 50 neutral mark. However, price action is the leader here, which is still trying to hold up to that overall multi-year bullish bias. These are the key charts that I have. Please let me know if you have any questions or any key charts I'd like me to cover in this webinar or the next. I'll be posting the recording of this webinar on our YouTube Forex Middle East channel shortly after we end this webinar, and we'll definitely see you tomorrow. Thank you for attending and always open to any questions and comments. Thank you.